Okay, let's get started. Firstly, I want to thank everyone that's joined online and in person here today. My name is Deepa, and I'm the chairman of the LSE Alternative Investments Conference, and it's my pleasure to welcome you to this virtual interview today. I hardly think our guest speaker today needs an introduction, so I'll try to be brief, probably at the expense of fully describing the remarkable journey that you've been on. But it's my pleasure here to welcome Ray Dalio, the founder of Bridgewater Associates. I think it's fair to say that Ray has really embodied the American dream throughout his life. He was raised in a middle-class home on Long Island, his dad being a jazz musician and his mother a homemaker. He fell in love with the markets when he was 12, and after buying his first stock with his caddy money, it promptly tripled. So perhaps he was somewhat of a natural. Ray founded Bridgewater out of his two-bedroom apartment in Manhattan in 1975, and has since grown into the world's largest and most successful hedge fund. After 47 years of running the firm, he has since successfully transitioned its management into the next generation of leaders, but remains intimately involved in the investment side and as a mentor to the firm. Ray is a major philanthropist, deeply devoted to protecting the oceans and closing the education and opportunity gaps around the world. He's in the third phase of his life, where he wants to pass along what he has learned to help others be successful like him via LinkedIn articles, economic studies, and of course, New York Times bestselling books, one of which he has kindly donated, that being Principles for Dealing with the Changing World Order. So if everyone in the room could please give a warm welcome to our guest speaker, Ray Dalio.
Thank you.
So I think a great place maybe to start would be to kind of understand you better as a person. I think as students, we're often quite curious as to the innate characteristics that can explain such success over a lifetime. So could you please tell us kind of what kind of a child you were growing up?
I hated school. I didn't like the idea of, I just didn't get attracted to learning what I was taught. I was just a kid who played around. I barely got into college on probation. As you say, I like the markets. I like the things I like to play with my friends. And so I was, I think I have a relatively poor rote memory, a pretty good conceptual way of thinking. I'm voraciously curious. I have a great hunger for curiosity. I like adventure, and I like the game of investing in all of its dimensions, particularly when I got to be a global macro investor, because it allowed me to think about everything that's going on in the world and to bet on it, which put me in the position of being practical, testing my understanding because I get the scorecard. So that's been pretty much what I'm like and how I've evolved. Meaningful work, meaningful relationships are very important. To have a passion for what I do and to have great relationships with people who are on that mission. Those are the things that always resonated with me.
Okay. And I guess going back to your childhood, you kind of mentioned you didn't really like school growing up. I think it's fair to say that your relationship with education did change though, when you did the MBA program at Harvard Business School. Could you maybe speak to us about that time?
Yeah, I didn't like high school. I loved college. I did well in college. I got to Harvard Business School and I found a mix of people who were bright all over the world, fun to be with. And so that was great.
And what was your most memorable time then at Harvard Business School?
Oh, well, there are many memorables, but we would have these assignments, which were called written analysis of cases, WACs, that on Thursday we were given, this situation, this case, and we would, work all night, pull all-nighters, and then on Friday night at midnight, we would drop them into a chute, which was by the Harvard Business School bar. And in dropping them into the chute, we finished the assignment and then we'd go party together. So that stood out to me because I loved the whole intense thing of, learning and doing the assignment and then just having a blast with my friends.
Yeah, curious to know, do you remember like your first all-nighter that you ever pulled? I'm sure many students here have had to pull it as well, but it's something that definitely was a cornerstone to you founding Bridgewater.
No, I don't remember the
Okay.
particular one.
Okay, thanks. So I guess moving away from education, you kind of didn't stop your education there. You took it into the workplace as well. It's clear that you're kind of the most renowned global macroeconomic investor, but you continue to study and you studied 500 years of history. So I guess the question there is kind of why did you do that and what have you learned from it?
Well, on my evolutionary journey, I had the adventure, you place the bets in the markets, and then those became learning experiences. The best ones, the ones that gave me the most learning were those that were the biggest mistakes. So in 1971, I was clerking on the floor of the New York Stock Exchange. That's in the summer between my college and going to Harvard Business School. I was a clerk on the floor of the New York Stock Exchange and following the markets. And on August 15th, 1971, President Nixon gets on the television and tells everybody, he didn't phrase it this way, but he told everybody they're not going to get their gold. But gold was money then. Paper money was like checks in a checkbook. And he said, you're not going to get your gold. Nobody's going to get the gold. And so I went back to the floor of the New York Stock Exchange that morning before it opened. And I expected, money as we know it is not going to exist. So I thought it'd be a big crisis and it would go down a lot. And when the market opened and through that day, it went up a lot, the most in decades. And I was surprised because that was the first time there was a devaluation. I didn't know what they existed. And so I went back and I, dug into history and I found the exact same thing happened on March 1933. I think it was March 15th. 1933. Anyway, I'm not sure the exact date, but Roosevelt got on the radio, made the exact same announcement, and the stock market went up a lot. And then I learned, like, when you print a lot of money and you create it, everything goes up. And that let me know for the first time, and it happened a few times since then, that there were times that if it was something coming along that I hadn't seen before, experienced before in my lifetime, it might have happened before, like there are these 1 in 100-year type of events that are big events. And so I needed to study those events. So I needed to study the Great Depression in that period of time, which allowed me to anticipate the 2008 financial crisis, because the way the financial crisis happened in 2008 was the exact same way it happened in the 29 to 32 period, and which was great. So I got in my head that if something big is happening and I didn't see it before, I needed to study it. So there were 3 big things that are happening now that prompted me to study history. I knew they happened in the 30s, but I wanted to study before that. So the 3 things were the amount of debt and money creation, unprecedented amounts, so I wanted to study, how reserve currencies rose and declined and, the whole cycle of that. The second was the internal populism, the gaps, wealth and values gaps, having this effect to produce populism of the right and populism of the left, and a political system that was basically at war with each other, that there was irreconcilable differences. That never happened in my lifetime before. And then number 3 the rise of a great power to challenge the existing great power, the change in the world order, essentially, the great power conflict. That didn't happen in my lifetime. I knew that that happened in the 1930 to 45 period. All those things did, but I wanted to study that more. So I felt I needed to study the rises and declines of empires and currencies, because all of these things relate to each other. You know, if you have a war, it certainly reflects in the economy and, you know, all of that. So I wanted to study the last 500 years of the rises and declines of reserve currencies, the empires, all the systems. So that's why I went and did that. And when I did that, I really focused on two other things that were major forces that throughout history and are today major forces, which are acts of nature. Droughts, floods, and pandemics have killed more people and toppled more orders than the first three things I mentioned. And then number four, of course, is man's inventiveness, particularly of new technologies. And so those five forces, the debt money economy one, the internal conflict one, the external conflict one, the acts of nature one, and the technology one, are the big forces. And by studying how they relate to each other, because they all interact, you know, you can't have a big one on one without the other, and it's really that dynamic. That was what I studied. And then when I saw that, keep in mind, like, I'm a practical investor, I'm not a historian, but I needed this for understanding that. So I did it that way. And I decided then to put out the book to convey it.
Okay, and I think we've kind of already touched on this briefly then, but in terms of how you distill what you see in the world into like frameworks, I think a very notable one is the five forces, which we've kind of touched on. Could you maybe speak to how you're seeing the five forces play out in today's economy?
Well, yeah, it's really good. I want to really convey the mechanics, you know, like, why am I having this conversation? My life, I'm at a point in my life where, you know, I guess I want to teach people how to fish rather than give them the fish. So I just want to go over the mechanics. There are, let's take them quickly. Are there limits to debt creation, and how does the debt money thing work, and where are they, and what is going to happen? Okay, there are patterns, and the patterns themselves are interesting, but really they reflect the cause-effect relationship. So that there's a cycle that takes place in that credit, you put out credit, you put out money in credit, and that gives buying power, and things go up. Markets go up, economies go up, and so on. But credit creates debt. And debt has the opposite effect, because when you get credit, you can spend more than you earn. When you get debt, but it converts to debt. And when you have debt, you have to pay it back, which means you spend less than you earn. And there's that particular cycle. But central banks have the ability to create more and more money and credit. And so as it builds up, and you know, debt service payments become greater and greater numbers. The debt rises relative to the income. Then you have to pay interest on the debt. And that means that a higher percentage of the income goes to debt service, unless that debt is converted really into productivity that produces income that helps to pay it. And if the system works well, if debt doesn't rise on a sustained basis relative to income, because income rises because that debt produces the income. So there's that debt cycle, and you can watch it, and you know, it's almost physiological. You can watch it. It's almost like plaque accumulating in the heart because of too much cholesterol or something. It's mechanical. So you see that then rising, and then you see governments spending more. So then you see the private sector, and you see the public sector, and you see the roles that they're playing. And when there's a debt imbalance, then central banks have got to come in and buy the debt because the free market doesn't buy it, and it goes through a cycle until, and then you have the issue that it becomes too great. You can't sustain that amount of buying. You have to do essentially some form of restructuring. That form of restructuring means that you have to reduce the debt to income ratio, the income that's needed to service the debt, because the servicing the debt becomes too much. So you have to pay that back, or you have to deal with that. And then that produces a debt restructuring of sorts, which can happen in the form of either defaulting or reducing the amount of debt, or extending the debt maturity, or the amounts reduced, or the producing of money and credit, because what a debt is this promise to deliver money. So if you put money in the system or give it to those who need it, then you can pay it back. But those times are traumatic times. So that's what that cycle looks like. And now we're also, let's say, if I take the second force, and the internal political, we are at a critical moment. It's in many countries, but particularly in the United States, in that you have populism of both sides, which have irreconcilable differences. And in a democracy, that's a threat to the system. So there are issues that will not be ever resolved through compromise. So populism is one of those things where each side is a win at all cost. And that's what you're seeing. You see the population in the United States so split, and they don't want to hear any reasons of compromise or anything. They just want to win at all costs. And there are economic issues pertaining to that, of course, the wealth and opportunity gap, but also there are social issues like, the sexuality of children, where they get educated, how they get educated, all those things going on. So we're seeing that. I think 2024 will be a defining year. We're going to learn a lot about how we first get through these elections, whether both sides will either side accept losing, or how will that go? And then we're going to come into a period of great conflict between them, such as, for example, President Trump wants to change the governmental employee system so that allies of his are in roles as administrators. There's a government bureaucracy and they're registered. He wants people who are on his side to be in those posts, and you're going to see more the weaponization of the political system, which causes conflict with both sides. So in 2024 and 2025, we're going to see a lot of that. And of course, that's going to have a big impact on also tax and economic policies, which I can go into, but I'm taking too long. The third thing, of course, is the international great power conflict. We can go into that if you like, but 2024 and 25 are going to be very important years, and that we're seeing wars, a war in Europe, a war in the Middle East, and you could see a type of war in Asia. And the United States is very much an overextended empire. And as you know very well, there's a lot of talk about money, how much money can be provided to provide these wars and all of that type of thing. And then, of course, so those, I think, are the big things. Of course, climate and acts of nature will be, in each of the next years, very important. The economics of climate, not only its impact, changes in migration, changes in lots of things, but the cost of it is estimated about $8 trillion a year. That's 8% of global GDP, and that'll happen in one form or another, either in trying to mitigate rising temperatures, or in trying to adapt to those climate changes, but like trying to create environmental protections. In other words, you build up your seawalls and that kind of stuff, or it will or in the actual damage. So we're going to see that happen. And of course, I think over the next 2 or 3 years, you're going to see technology changes have an enormous impact because when it's apparent in AI, but it's also in many other areas like quantum computing and many areas. You're going to see big changes over really the next 3 years. So I think over between now and 3 years from now, maybe 4 or 5, but 3 years from now, it's going to be like going through a time warp, and the other side of that is going to be radically different.
Okay, thank you. And I think I appreciate that was a lot to take in at once. So perhaps if we like decouple some of the effects that we've touched on a bit, I think as you've already touched on, this is a very big year in terms of the political direction that a lot of Western countries go into. Could you maybe speak to the differences we see in Europe where there is less of the kind of populist agenda and politics tend to be more central? How do you kind of see that difference in terms of how Europe and the US develop?
Well, the challenge of Europe, I guess I would say two challenges is that politically and in many ways it's very fragmented. When you try to take all those countries that have to make decisions almost unanimously, and you have such a fragmentation from a geopolitical issue, or political, it makes for a relatively inefficient government system. And then there's the declining competitiveness of Europe, which is reflected, creates a big dilemma that the real big leadership of technologies is not just having an effect in terms of not taking a leadership role in those areas, which has economic and political and geopolitical implications, but it's also has a problem with the question, for example, of imports. For example, let's say the automobile companies in Germany. The model is and Europe, which is core Europe, is a challenge because are the car companies going to be effective, and then Chinese electric vehicles coming in, green technologies such as solar and wind and batteries and so on are much more competitive. As you lose the competitiveness, you lose the share of that. That has an economic effect on Europe. What is the model of cheap energy from Russia or cheap energy, and then put that where there are not much military defense expenditures, and there's competitiveness in those various areas. All of that is being threatened. So, it's relatively peacefully, fortunately, it's relatively peacefully dealing with those issues, but it's more like it's in a graceful decline. So I would say whether you use the various strength measures, let's say economic strength, military strength, those kinds of things, it has problems at the same time as it has, I would say, much better civility. I think the big problem, like in the United States, is this great polarity on wealth gap and opportunity gaps and conditions of living gaps, which means that you have an extremism. You have, on the one hand, these pockets of great inventiveness, the unicorns, creation of unicorns with great technologies and so on. And simultaneously, you have big areas of poverty and you know, deep-seated problems like neighborhoods where there's poverty, there's you know, broken households, drugs, shootings, and those things going on that becomes manifest in, you know, you walk around the cities increasingly, you know, you see it in various, the breakdown of the infrastructure, the populations, and so on. Europe is better in that, in those regards.
Okay, and I guess kind of following on the theme of a lot of the social issues you mentioned, I'm curious to know kind of the role you see for the government playing in that, or whether you have faith in the free market. Perhaps we could focus on like one issue at a time. I guess the fourth force being the environmental issues we're facing. Do you see the government as playing a big role in Western countries to kind of tackling the issues?
Well, let's take the broader question before we go into the environmental question. The question is, how does democracy work? So when we say the government is chosen by the people. And then the question is, how well do the people choose, and how well do their policymakers, how smart and able to work together are they? And so that varies by country, that varies by place. But it is a challenge. Okay? And it goes back to the people, because the people determine, the people who are in government making decisions, and do they choose those well? Well, you know, there are real questions. It varies around the world. It is a question, certainly in the United States, because of the polarity. It is a question. And then you put that, as I say, in the hands of the government officials. Like in Europe, as I say, it's highly fragmented. It's very difficult to coordinate, because when we say government, you know, there are all these levels of government. So there's the central government, and then there's the provincial government, and then there's the local government, and all of that. And they're all fighting with each other. And you know, like, to get them to agree and operate harmoniously and efficiently, you know, isn't happening so well, and probably is not likely to happen very well. And then, okay, now you could apply it to any areas. You can apply it to, you know, climate, or you can apply, that's what you were asking about, and you could apply it to climate. So when you apply it to climate issues, I think that, you know, there is a greater sense in Europe, I think, of the whole ecology of the relationships of people with each other, and also people with nature. And so it is, you know, that is existing. And Europe has, therefore, a greater, generally speaking, desire and mandate, essentially, to pursue those things. And then it has to do with, and it will, but as it deals with that, with a decreasingly competitive situation in those areas, it has a conflict. In other words, okay, are we now going to take in the best Chinese, you know, what's going to be best at that level, or how is that going to be the electric levels for you know, car manufacturers and all of those things? And so it, you know, okay, now there are trade-offs to all of those things. So these will be the questions that, you know, Europe is going to face. And, you know, and do we put more money into military? And can we decide well? And can we balance those trade-offs well? Those, I think, are the questions.
Yeah, no, I think that's fair. And I think kind of we've touched on like one of the big shortcomings of democracies being, I guess, excessive bureaucracy we see in Western countries. You know, you have a very strong relationship with China, and you have done throughout your life. I guess maybe it could be worth hearing about, you know, how you see alternative political systems to democracy contributing to success in different economies.
Well, Plato and his Republic dealt with this cycle, you know, and each system has its drawbacks that come to the surface in certain kinds of environments. And so the great risk of democracy essentially is anarchy. In other words, everybody fighting with each other, and so the system doesn't work well, which then tends to cause these types of civil wars. They're not they can't make decisions of even how they're going to be with each other. So you have this history of civil wars. And then, then you have ideally the benevolent despot who rises. Plato thought that the best system was the benevolent despot that rises, and then of course you have corrupt people. Power corrupts and absolute power corrupts absolutely. And then you have that particular dynamic in which then there were revolutions and then it rises and so on. So that becomes the nature of the beast. And so the question, I think, there's a question about democracies versus autocracies and how well they will work. And it's a test of us and our systems. I don't think it's a good idea to have just blind faith in democracies and not realize the responsibilities of behaviors in order to sustain those democracies. I think democracies are at risk. I think we're seeing signs of these issues around, and the loss of competitiveness, loss of effectiveness, or the problem of that. And then there are, of course, cultural differences between countries. We tend to think about countries, but even the thinking about countries is almost just a modern way of thinking of something that we're used to, but we don't realize that the definition of countries and throughout history changes very much. Like you have wars, and then they redefine what the boundaries of the country are. They redefine countries, but cultures remain. And so you have these cultures. Cultures will play an important role, and so we have a cultural war going on, and unfortunately, a lot of it is misunderstandings and also lack of tolerances of the other. But I see the cultural war. You mentioned China. Yes, I'm very lucky. I started going to China in 1984, and I've come to know, respect, appreciate Chinese and Chinese culture over that particular way. And it's. You go back, it's Confucian, it's how do individuals behave to each other, how do you have conflicts, like the tribute system, all those things. There are all those things that go on, and one looks at it, one would respect it and understand it. Then there's a different Western approach that one could look at and understand. They don't even, the sides really cannot imagine looking at things through each other's eyes. The issue of what a war is, how a war should be fought, are very different in the West and in China. For example, what I mean by that is the Chinese would believe that to fight a war the way, people beating up on each other, you must be stupid and not clever enough to be able to have won the war without having that kind of war. And so they have a Confucian approach. How do you approach that versus a Western approach? Anyway, so we have cultural issues. We have all of those things. I'm rambling, so I'm going to stop there.
No, we're good for time as well. So then I guess taking a lot of these forces, big picture ideas, and distilling that into actionable insights. I appreciate you said you don't want to give us the fish, so maybe we'll keep it like in terms of mechanics. But how do you recommend that us as aspiring investors kind of translate a lot of these bigger moving parts into actionable insights in terms
I
of
think whether you're investors or whatever you're doing, you've got to understand this, you've got to do it, and you have to have an understanding of it by being a global participant in it. Don't be provincial. Get into the flow of the global stuff. Now, I think personally, I'm biased. I think being a global macro hedge fund manager is the best possible way to experience it and do it, because it allows you to look at, the world, all of its various pieces interacting the way they do, and to approach it by the ability to go long or short. So you have no excuses not to perform. You have no constraints. You have the freedom to be able to make those, and it puts you into a very valuable learning experience about how the world really works, and it'll give you feedback, because if you, the only way you're going to know whether it works, whether you know whether it works, is by your P&L. So, but whatever it is, there are three phases in life, right? First phase in life is you're dependent on others, you're going to school, you're learning. Second phase in life is you get out of school and you're going into work, others become dependent on you, and you have to be successful. It's a very different world that when you go into that new world. Just assume you don't really know much about how the real world works, because you're really, you've been guided. They tell you what classes to take, they tell you what systems to use, and they tell you how to behave. Well, the real world isn't like that. So you go out there, and then you're in that real world. Okay, through experiences, you will learn, and you'll learn through, the best learning will come through painful experiences. I mean, nobody likes pain, but like I have this principle: pain plus reflection equals progress. Pain means probably you're interacting with the world in a way that doesn't work well. And so you better reflect on, that. How does the world work, and how should you interact with it to get what you want, and that produces pleasure rather than pain? And so that's, by the way, why I write these books on principles. Principles are the ways to interact with reality to get the things you want. But anyway, so I think the advice I would give you is experience the world, learn, gain perspective, perspective of history, perspective of what's going on through experiences, bet, encounter, take the feedback and use it for your learning. You'll also learn, what do you love and what don't you like? You have to find out, basically, learn your nature. What is your nature, and what are the best paths for your nature? I put together a personality profile test, because in running Bridgewater, starting and running it, I want to know what people are like, that help them know what they're like. It's called Principles U. It's online. It's free. Take the test. It'll give you some sense of what your nature is. And with that nature, you're in pursuit of your path. And what is the path? And through that experimentation, you'll learn and you'll evolve.
Absolutely. And I think, yeah, you emphasize that quite heavily in Bridgewater, that kind of full accountability of knowing your weaknesses. So I guess hopefully this isn't too personal of a question. I think you mentioned earlier that your rote learning might not be as good. What would you say is your biggest weakness, and how did that affect how you recruited around you? Kind of to cover for that.
I'm curious. I want to run all over the place. I want to do everything. I'm, kind of very lateral and so on. And then on the other hand, like, if I don't have the help, the infrastructure, like, I don't even know, like, where I'm going later today or tomorrow, or what country I'm going to be in, or any of that. And the whole rote memory thing, paying attention to precision and details, or anything that has, kind of like, you just have to repeatedly do these things, that kind of stuff, I'm not good at. There's, in Myers-Briggs terms, there's, there are different. I'm what's called an ENTP. So I'm an extrovert. I tend to prefer, there's okay, are you an N or S? N means like, they mean like higher level thinking. How does the system work? Can you go above yourself and see it that way? Or do you pay attention really to precision and detail? I'm very much an N, kind of a big picture thinker, then likes to drill down on things. And T, there's thinking and feeling. There's when they're at odds. And let's say you're saying, should I do this thing or should I not do it? Some people are much more emotional. They'll let the emotion take them, govern them. When they're at odds, what do you choose? I'm very much more a thinking, like I'll force myself to do things that I don't like, because I know I don't want those to be barriers. Like I don't like heights. Let's say jumping off from a high level into a swimming pool. So I'll force myself to do that just out of the exercise because I don't want those to be at odds on that. And I'm very much more a ENTP, which means sort of a perceiver, thinking multiple possibilities and so on, as distinct from, in Myers-Briggs terms, they would call that a J, meaning somebody who likes to have a detailed plan and sticks to that detailed plan, and which, so that's my nature. And I have to, I find it helpful to work with people who have the opposite sort of capability so we can strike a good balance.
Okay, so then I guess focusing on the end, you mentioned that ability to analyze things from a high level. I think it would be great to kind of follow your mental map with a specific metric that's very relevant to economies. So how do you look at inflation in the context of the five forces, and what key factors will impact inflation? Again, we can keep it very mechanical in terms of how you look at it.
Okay. Inflation, I don't look at supply demand levels, supply demand the way you're taught and most are taught in school. I think that the price of anything is equal to the amount spent on it divided by the quantity of it sold. Okay. So then I look at what are the determinants of the amount spent on it. Now, the main determinant of the amount spent on it is the amount of money and credit that is made available by central banks. That's, particularly the main thing. Give people money and credit, and, they'll probably go spend it on goods, services, and investment assets. They might spend it on investment assets instead of goods and services, in which you can get therefore, investment inflation as distinct from a goods and services inflation. But anyway, that will be that. And then what we have is the quantity of goods and services that are being able to be produced. And so when there is excess slack in the economy and there is more demand, then the marginal cost and margin of producing is not high, and the marginal quantity is easy to produce. So, but when you start to encounter constraints on that production, and then it becomes higher, then you have a higher rate of inflation, because if the demand of spending continues to be high relative to the quantity of goods sold, then you're going to see more inflation and less productivity. And then that, of course, produces the cycle that we're used to of central banks tightening monetary policy and so on to deal with that issue. And then we produce what I call the short-term debt cycle. That's the nature of that beast. So, and it's very important that balance be maintained, because let's say the exchange, and I'm want to convey the mechanics of this, that there's a debt, there's a borrower debtor, and then there's a lender creditor, and it's got to work for both of them. And so if you have too much inflation relative to the amount of interest that you're being paid to compensate for inflation, then what you're going to do is have a problem that the saver, holder of the debt instrument, is going to get a bad return, and that produces its own dynamic. And vice versa. If you have an interest rate that's too high relative to the rise in incomes, inflation, the inflation, and essentially as it's carried through the rise of incomes, so you have a situation where the interest rate has got to be, the real interest rate has got to be high enough that it works for the creditor, but not so high that it breaks the debtor. And when you have more and more debt and financial assets, one man's debts, another man's financial assets, as they rise together, that balancing act becomes more difficult. So you have to look at, I describe the capital transaction, borrowers and lenders, but then that carries over to the economy, because those who, borrow and spend, that produces the economic cycle, as that one man's spending, is another man's income. So that balance has got to be achieved. And so when we have situations where it gets very much out of balance, let's say, for example, where we were, where interest rates, nominal interest rates were 0 or below 0, and real interest rates were significantly negative, and you had the government printing money and buying financial assets, you had a very, it didn't pay to be a lender, it paid to be a borrower. And you got a lot of borrowing and you created a bubble. And then when that was done a lot, what we created was the bubble that we're now, which produced the inflation because of the mechanics I just described. And then when that inflation came, then you have a tightening of monetary policy. So just generally speaking, what we've done around is to raise real interest rates to what appears to me about an appropriate level. In other words, if you take, let's say, inflation index bonds by way of example, and using that, and you say, where are the real interest rates? And it'll vary by country, but it's somewhere in the vicinity generally of about 2% real. Okay, and that number seems to be like a real rate. And then if we're talking about monetary policy, what is the desired monetary policy? Right now, it looks to me like, there's built into the curve and a lot of talk about big cuts in interest rates. I don't see any reason for that, because given the trade-offs that we're talking about, I think you have an inflation rate, depends on the country, but by and large, let's speak in that general, in the vicinity of 3-ish, something, let's call it 3-ish. Central bank targets are below those levels, but let's say 3-ish. It could, and then you say, I take a real rate of 2. That brings me in the vicinity of a 5. And then you also have a supply-demand issue, because the budget deficits generally are quite large. And also the central banks hold a lot of the debt, which, if anything, they're more inclined to get rid of that debt. And then around the world, you have too much money in debt instruments. So you have a supply-demand issue, which I think, could lead to a worse set of circumstances in which the supply and demand imbalance might need the central banks to come in and print money and so on. So for me, those reasons, that's how I look at that's how I look at the credit markets now.
That's interesting. I mean, and when you lay it out, obviously, it might sound maybe a bit more obvious to us, but what do you think the market is seeing that you're not? Why is there that difference? And I guess in this decision as well, is there
I think the markets, the markets are looking for a positive slope yield curve. They want a positive slope yield curve. We're all used to a positive slope yield curve. And so it's almost, in my view, that's more the habit of looking at what's happened in the past, and they want a positive slope yield curve. You don't have a positive slope yield curve, it produces some elements of problems. And I think they would say that on the short end of the yield curve, rates look relatively high relative to those measures. So I think that might be the distinction in terms of the credit markets. If we're dealing with, let's say, equity markets, and we go beyond, there's equity markets, there's currency markets. If I look at the equity markets, I think it's you can't look at the equity markets in aggregate because the differences between the companies and their circumstances and their industries is an enormous difference. So when we have companies like the Magnificent Seven, or you have such transformative changes, so that artificial intelligence and its implications and those types of things, they're very different. And you contrast that with, let's say, at the opposite extreme might be commercial real estate. And you say, wow, what a disaster. You have to look at each one of those things, and that'll be but I'm rambling too much, so I'll stop there.
Not at all, not at all. Okay, so I think we'll move away from markets for now. Perhaps if we have time, you can circle back. You mentioned the Magnificent Seven, so it'd be great to get your take on whether you see bubbles developing in their stocks. But I guess it would be great to learn a bit more about your kind of business philosophy. You talk a lot about the idea of an idea meritocracy at Bridgewater, and you've described it as an intellectual Navy SEALs, for example. What does that actually mean for it to be an idea meritocracy, and how can we as students, I'm sure everyone here would love to work at Bridgewater, how can we thrive in such an environment?
It's a very simple thing. Can we be totally truthful with each other, particularly looking at strengths and weaknesses and mistakes? How do you get a truth? Not one person pronouncing a truth. That doesn't mean the boss knows whether you're doing a good job or not. I think that you have to be an equal participant, and on an evidence-based basis, look at what are your strengths and weaknesses, and therefore, how can you be assigned that role, or how do you work well with others so that you compensate for your weaknesses because you're working well with somebody who's strong where you're weak. One way or another, you have to be radically truthful and radically transparent. And if you do that and you approach it well, you'll get better. You have to be, truth is the foundation for finding out how to improve and to be your best. And then also, truth produces trust. If you know that I'm going to tell you what I think, and there's no hidden agendas and so on, you may not like what I say, but you trust that I'm going to be open with you, and vice versa. Can you be open with me regarding whatever issues you want, and how together do we find out what's true and what to deal and how to deal with it? I think sports teams sometimes do it much better than companies because, well, they need to do it, but it becomes very apparent that they need to do it, and so that they say, listen, you're just not hitting it right. Here's your score, and so on. Well, we as a team have to score, and so we have to go through that same thing, and we can't be, so sensitive about our feelings that we can't do that well. And so I believe in what I might call tough love. So here's what I built Bridgewater on. I want an idea meritocracy, so the best ideas win out.
Yeah.
I want meaningful work and meaningful relationships, meaning being on a passion to do great things together, to win, and to have deep relationships so that there's caring about each other. So at Bridgewater, we're in each other's lives together. There's a community, and many things. We're at each other's, weddings and funerals and baby things, and not obligating, but we have lots of, I don't know, there's something like 100 and some odd clubs that, do things together. You don't have to, but, in it together, there's a sense of a community. Community is a powerful force. So meaningful work, meaningful relationships through radical truthfulness and radical transparency. That I truly believe in. That was in my bones. That's why it exists at Bridgewater. It comes from my necessity as an individual to have those things, believing in those things. And I was lucky because I made the company. I didn't go into a company. And if I went into a company, then I would have to adapt to whatever culture or ways they're operating. And I believed in those things, and those things ended up being great because we compensate with each other, strengths and weaknesses. We're doing that. We build a community as a real devotion to that kind of mission. And so I did this for 47 years and passed it along. So, that was my arc, and that's what it's about.
Yeah, and I think probably the best example of that kind of tough love and radical truth is when you kind of scored Bridgewater employees using baseball cards. Maybe you could speak to us about that and how that went.
Well, yeah, I wanted an evidence-based way of knowing what people's strengths, weaknesses, preferences were. Okay. And so there's a TED Talk if you're interested. I did a TED Talk, and I think it's called, how to make the best ideas win out, or when the best ideas win out. And you could see it. So we can collect data. I created a vehicle called a dot collector, where there's a lot of information that comes in. And baseball cards are scores data that come every day through the dot collector and other personality tests and so on. We learn what a person is like, and they're partners in that learning. In other words, we say the evidence seems to be that there's this, I don't know, repeated pattern, and here's how it is, and let's look at that together. And okay, what's it like? What are your strengths and weaknesses? And then that comes out on baseball cards that evolve. And I called them baseball cards because, they're kind of statistics and evidence, and your batting average is this. And so that's just, what it is, and here's what you might do to improve it. So that's what baseball cards are. And then with that, I've developed other tools that are things that somebody with a certain baseball card will fit well into a certain job. And you could use data for understanding that, because you could say who performed very well in that job, and what were their stats and attributes that allowed them to put in that job, and that can help you pick what you need for doing that job well.
Okay, I think from what you said, it sounds like a lot of the culture of radical truth is quite innate. But I would be curious to know if kind of your mindset has changed concerning certain things.
No. I don't think so. I mean, meaning, let me clarify so I can make clear that point. I think that we are raised in an environment where it's not very innate. I mean, it's something that radical truthfulness is something that people either innately or they've environmentally learned to be prejudiced against. It's like disagreement.
Yeah.
There is a almost instinctual reaction that disagreement is a fight. And I think that one has to think it through better, and then control oneself and say, if I have a disagreement, shouldn't I have a curiosity about what's true, and how do we get at what's true? So I just want to emphasize that it takes adaptation. I'll just want to add another thing. This is not required, but meditation has helped me a lot.
Yeah.
Meditation. I do transcendental meditation. I did it since 1969, so almost most of my life. And that helps me, gives me sort of a calmness and sort of go above it all and try to operate with people in that way. But I think one way or another, calmly figuring out, what's true and what to do about it is important.
Yeah, then. So, and I guess with the benefit of hindsight and kind of these years of meditation, it'd be great to know how your definition of success has changed over your life, if it even has, and if so, why has it changed?
I think each person determines what success for them is, so that there's not a universal definition of success. I think that the conventional definitions of success, like acquiring a lot of wealth and a lot of power, are an over and pretty stupid, almost oversimplification, because the question, let's say for money, is what does money get you? And there's marginal benefits of money, but let's say money gets you stability, it gets you security, it gets you freedom up to a certain amount. And then for you, and then for your families, let's say you're taking care of those types of things. And then past a certain level, it doesn't get you, the marginal gains are, margin utilities are limited. Happiness has been shown, like there's very little correlation between the amount of money that one has and how happy one is past that basic level. Once you get past that basic level, but I think the individual defines that, and I think through their stages in life, it evolves. So I think it's almost like the question of, what food do you want? Well, food can taste good, food could be healthy. What do you like? What do you want to do? And through your trial and error, you go out and you experiment and you see those things. Be careful not to assume that it's make a lot of money, and so what is happiness for you? Make those evaluations. I believe make your work and your passion the same thing, and don't forget about the money part. Money part will give you the freedom and give you all that, but don't do it for status. Don't do it, it's not, because it will not sustain you. If you're doing it for status, then you're looking for the approvals of others. Others give you status. You feel that you lost touch with yourself and what's going to bring you happiness, I think. So to go discover, I think life is a lot like playing a video game. In other words, you go after your goals. The goals change through your life. They evolve, but you go after your goals. You come across your obstacles. You have to figure out how to get around your obstacles. As you do that, you get learning points. And with those learning points, you go on to the next step and so on. So it's more like that than it is the education you get in school.
Yeah, so then I guess in this like video game of life, it would be great to know what your kind of biggest failure was. You kind of already mentioned that pain is a prerequisite to progress. Be great to know what's like a mistake that
the biggest failure that I had that was transformative happened in 1982. I had calculated that with the tight monetary policies, 1979 to 82, that American banks had lent much more money to foreign countries than those countries were going to be able to pay back, and that we were going to have they would default and we'd have a big debt default crisis. And that was an extremely controversial point of view. Then in August 1982, Mexico defaulted on its debt, and a number of countries then followed, and I got a lot of attention for that. I testified to Congress. I was on Wall Street Week. I got a lot of attention, and I thought we were going to have a debt crisis that would be an economic crisis, because in August 1982 they defaulted. I couldn't have been more wrong. August 1982 was the exact bottom in the stock market. I lost money for me. I lost money for my clients. I was so broke that I had to borrow $4,000 from my dad to pay for my family bills. And this, you know, I'm very publicly wrong. So I had to let people go. I was, you know, I was nothing. It was really come down to me, and very painful experience. And that was the best, probably most transformative experience I had, because I had to figure things out that led me to figure things out in a way that led to my subsequent success. So what happened was, you know, okay, so I figure, okay, you know, return and risk go together. And I figured it's almost like I was sitting on one side of a jungle. I could be on the safe side of the jungle and go about my life in a safe way, but I wouldn't have the big upside. Or I could go into this risky jungle with all of the things that could, you know, kill me. And I didn't want to go through another one of those experiences. Particularly, I had a family, I have to pay for that and so on. But I couldn't imagine myself, you know, putting on a tie, getting on the commuter train and going into Wall Street and doing that. So okay, so how do I do it? I had to figure it out. And what I learned is, first of all, I learned humility. In other words, not to be so confident that I was right. And that led me to understand, you know, I wanted the smartest people I could find who disagreed with me. I wanted to have conversations so that they would stress test my thinking. It really taught me humility to deal with my audacity. So that was one of the things. And the other thing that it taught me is what I call the holy grail of investing. In other words, by creating good bets that are diversification, by creating good bets that are uncorrelated good bets, I could reduce my risk a lot without reducing my returns. And so I was sort of like, okay, now go into the jungle with people who are on the same mission with me, who could see things I couldn't see. That's what created the Bridgewater culture. You know, an idea meritocracy, and let's all watch out for each other. And I went into, you know, so I go into the jungle, and we all are doing it together. And I got so much enjoyment and success from being in the jungle that I didn't want to go to the other side and get out. I like being in the jungle and playing the game. So that experience, that very, very painful, big experience, painful experience, was a great learning experience that let me know how to deal with what I was dealing with. And that created the bottom in Bridgewater that then led to, you know, its great performance that led to it becoming the, you know, the largest hedge fund in the world, and having these meaningful work and meaningful relationships. All of that good stuff all came out of that big mistake, you know, that.
Okay. There's a lot to unpack there, so maybe you'll save it for next time when you come to the conference next year. But we're going to go into Q&A now. There was a lot of kind of interest to submit questions, but for the sake of time, we'll kind of save it to two. So the first question I think is quite topical, being that we're in London. It's from Medea from Bocconi. She's asking, where do you see Europe in 10 years? So I think we touched on it very slightly, but I guess high level, not linked to any of the forces, just where do you see Europe?
In graceful decline.
Why? Which of the forces cause that?
Well, I mean decline in competitiveness, and then as you have, so it's a relative decline. I think that on the gracefulness of it, which can't be taken for granted because there are issues. I think, though, that there's a relatively higher level of civility and you know, and reasonableness there that gives it its grace and its civility, and yet at the same time it's not leading edge. It's more lagging in a number of areas in terms of competitiveness. And we could list the various ways. I touched on some of those things. And the effectiveness, of governments and that element of vitality that is having, a competitiveness question that also has to do with, leads to a financial question or financial issues. That means that some of the things are less affordable. So as I say, when you're dealing with, probably what will military expenditures be as let's say the United States pulls back from its various ways. Imagine that you didn't have a United States in NATO in terms of that. How effective is the military there? It's not effective in a lot of different ways. It doesn't coordinate well. It doesn't operate well. It's not cutting edge and those types of things. In order to make it better in that regard, it has to do things differently. It has to, and the coordination and all of that's a problem. But I'm talking about military, the same is to some extent true in terms of its economic vibrancy and cutting edge technologies and so on. So, that's what the picture looks like. So if you're in Europe, which is a wonderful place to be, and, in many ways, I can go on for all the different ways. I think you must have a lot of exposure. And my advice for you as people setting out on your careers is make sure you have good international exposure to what's going on in the world. You're blessed with being in a wonderful school with other, that way. And so just don't lose sight and make sure you have that opportunity to have those connections all around the world, so you make the right competitive connections and you see what's best.
Yeah, thank you. And I guess the next question is from Rowan Gardiner from LSE. The question is basically kind of looking at the mega trend of climate change in global economies. I think we touched on it a bit earlier as well. But the question is, what strategies do you foresee as best capitalizing on the opportunities that creates?
Well, I'm dealing with, I assume that's the global climate question. The way I see it is there are three ways of dealing with the climate issue. The first is mitigation, which means try to find ways, new technologies and various ways of keeping the temperature levels from rising. That would be a good simple version of that objective of to do as little harm as possible. That's not receiving much money right now. It's roughly 1/6 of the amount of money that's estimated to go into that is going into that for reasons I'm going to come back to answer your question. The second is adaptation, and by adaptation I mean let's say how do you adapt to the changed climate? So, for example, in Indonesia, they'll move the capital from Jakarta to another location, whether there's building of seawalls and all of those ways to adapt to the climate change. And then number three, the cost will be just the damage. And of course, that'll become manifest not only in the physical damage, but it'll also be manifest in things like migration, large populations moving from places that are bad to try to move to other places, and the implications of all of that. So now what you have is a giant force that is in its work, and you do have man's inventiveness of dealing with that. And the biggest, I believe, there's a huge opportunity in climate venture and climate finance. So it's going to be a bit, one way or another, it's going to a lot of money. It's a big deal. 8% of world GDP. So just like you have tech, I think you have a climate opportunity. I think climate venture in various ways looks very, very interesting. And it is the only way money is going to come into it, because the reason not enough money's coming into it is because idealistic people say we should invest in it because it's a good investment, but they don't look at, who has the money and what is their motivations. And anybody who's got the money, I won't go through it, but there's philanthropists, they don't have any money relative to the size of the problem. People look at banks, or companies. The problem with the bank is only money they have is the money that those who go to the bank give them. And so they have to give them a good return. Same with companies. They, in a sense, they have a good return. They may change it, but don't so much depend on them being nice as distinct from their economic considerations. And the biggest pile of money is investment money, particularly institutional investment money. There's about $200 trillion in that, and they are dying to invest, but they need something that's going to produce an adequate return. And so I think that's creating global climate finance in venture and other types of areas. And so I think that that's going to be a big area of the future for somebody, who's interested in that.
Okay, so that's quite an optimistic note to end on. Unfortunately, we do have to end now. But I think everyone in the room would just like to give you a really big round of applause to kind of thank you for your time.
Thank you. My pleasure. All the best to you. I'm excited about you. I wish I had the opportunity to do it again. Your age, I think what you're going to have in front of you, enjoy the adventure, May the force of evolution be with you. Well, it'll be great.